Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo, and on today's episode, we're going to continue the conversation around taxes. If you haven't listened to the last episode, I recommend you starting there. In that episode, I broke down really how the tax code works from a taxation of our income, right? So I went over marginal versus effective tax rates. On today's episode, we're going to be talking about tax planning or tax insights, looking towards the future. Right? Because in the end, all of us are saving money really for kind of two reasons. The consumption or income later on in our years when we no longer want to work, or legacy type of planning. And when we're looking at it from that perspective, the only thing we really care about is what is the net, meaning after tax income that's coming into our world, especially in retirement. And that's a key ingredient that I think oftentimes is overlooked. That's how we should be planning because that's what we care about. And in today's world, there's a lot of blanket statements out there that I think should be looked at for your personal situation. And one of those blanket statements is, as soon as you get a job, your first dollar should be going into your retirement plan at work. And that traditional retirement plan, just as a reminder, how that works is, money goes into the plan pre-tax, meaning you don't pay taxes on that money today. It grows tax deferred. And then when you pull the money out in retirement past the age of 59 and a half, that money is fully taxable when you pull it out. Again, should that be a blanket statement that everyone should do? I'd argue no, because we don't know what your individual plans and goals are, and also, what do taxes look like 30, 40, 50 years from now? So that's what we're going to dive into today, is an explanation around where you're putting your money today. What is the tax status of that money when you turn it into income in retirement? So let's dive right in. So I'm going to go through, again, if you haven't checked us out on our YouTube, I do think you should check out our YouTube channel because we give you the visual side of what I'm explaining, at least via the audio here. So check that out. Beer and Money is the podcast on YouTube, and you'll get the visual side. So let me share my screen here as we jump in. And you'll notice the same fictitious client that we've been working with here, right? So as we're staring at this, this is a couple that's bringing in about $400,000 a year. They're saving 69 grand a year. And as you can see, they're maxing out their 401ks at work. They're saving $12,000 into savings, and they're also saving 10 grand into an investment account. And what their current balance sheet looks from an asset perspective is, they've got a home, right? This is the home they're currently living in. It's right now worth $1 million in this example. They've got retirement accounts worth $600,000. 500 of that is in the traditional 401k, traditional retirement model that I explained earlier. And they've got $100,000 in a Roth account. Now, as a reminder, the Roth account is money you pay taxes on today, gets put into a Roth. It grows tax deferred, and past the age of 59 and a half, you get to pull it out tax free. Then they have an investment account. The investment account is an account that is partially taxable right now and can be partially taxable in the future. This is at $100,000, and they've got $100,000 sitting in savings. Now, this conversation is about how much should be in their savings account. This is just a current balance sheet that sometimes I see, and specifically, it's most of the accounts, or most of the net worth, if you will, the values of the accounts. The biggest chunk that I always see is in their retirement plans, which is great because obviously without the retirement plan, we possibly may not have the savings because it's coming directly from their paycheck. Okay. So it's a good thing. But what do they look like in the future? What do they look like if they were turning on the income stream right now? As I mentioned, we're saving for retirement. We're saving so that we no longer have to work. And when we turn on the income stream, what's our net after tax take home? Well, that comes down to, okay, how much of our assets is fully taxable? How much of our assets is partially taxable? And how much of our assets could be tax-free? And so we built a pie chart together inside of our platform here, the Living Balance Sheet, where we can actually show clients what they currently look like from an income distribution tax status. Okay, and what you're going to see is red represents fully taxable, yellow represents partially taxable, and green represents tax-free. Okay, so as I go to the chart here, we are looking at the balance overview. So what we're going to do again is distribution tax status. Where their money currently is sitting, where it's been saved, how is that money taxed when they pull the money out? And as you can see, the majority of their pie chart is red, right? Because $500,000 is in their traditional 401k. They've got $200,000 in partially taxable. What that is $100,000 in their investment account and the $100,000 in their savings account. Keep in mind the interest rates we receive on our savings account is taxable, could be partially taxable. And then again, they had $100,000 in the tax-free, the Roth account, the non-taxable account currently. So what I'd have you ask the question to yourself is right now is, what do you currently look like? If you were to build out your pie chart, what would it look like? Would it look mainly red like this? Would it look mainly green, or how would it look? Would it have some sort of balance? I want to put a quick disclaimer out there. I'm not saying that the traditional retirement plan, traditional 401k, or traditional IRA is a bad plan to have. I'm only expressing what we're building. Do we want all of our eggs in one basket? And this is oftentimes what we see is a lot of our eggs in one basket in that traditional approach where the money's going to be fully taxable when we pull it out. To take this a step further, what would this look like 15, 20, 30 years from now? So if this client is currently age 44 and I'm doing a retirement age of 65, and we break down what they currently have, right? Their fully taxable money, their partially taxable money, and their non-taxable money. Here's what that looks like. They're currently maxing out the 401k. So they're putting $46,000 into their traditional retirement accounts. Again, the $12,000 into their savings, $10,000 into investments, and currently they're not putting any money into the Roth side of stuff. And as we just went over, as we calculate this, the vast majority of their money is red, right? It's taxable. And actually, this is not accurate. This should be 500,000. So I apologize about that. So this is what one thing here. This is not accurate either. So sorry about that. Now let's make it. There we go. Here's what they currently look like, just like we just saw over here. Fully taxable, majority red. What does this look like into the future? Well, if they're contributing the way that they're currently contributing, the pie chart only gets more red, right? Because they're putting the vast majority of their money into the retirement plan, and it's invested in stocks, right? And some bonds possibly. So they're getting that rate of return. So in the 20 years or 21 years time period here, now that retirement accounts, they're worth $3.7 million if they're getting a 6% rate of return. Is this what you want to look like when you get to retirement? Or maybe what they could do is maybe they stop putting the $46,000 into the traditional side, and maybe they have a Roth 401k at work, and they put $46,000 into the Roth account. So now it's going to be non-taxable. And now you can see when they get to retirement, they've got a lot more green. So if you have balance when you get to retirement with these assets and how they're taxed, now you might have different levers to pull to somewhat control your tax bracket when you get to retirement. And that's the point of today's episode is you're saving money so that you no longer have to work. Have you considered what that's going to look like from a taxation standpoint when you do want to pull the money out so you can continue to live the life that you want to live? This is thinking with the end in mind. This is tax planning and tax insights that often isn't spoken into. This is what you should be considering. So that's today's episode. In the next episode, we're going to get into some tax strategies when it comes to how do we redeploy these assets in retirement to essentially get some reduction or minimize the taxes that are coming out. I hope today's episode was valuable for you. Head over to beerandmoney.net. If you have any questions on this, or if you're looking to possibly build out your pie chart around what your assets look like from a taxation and distribution status, reach out to us. There's going to be a link in the show notes where you can fill out your information and get your own scorecard, your financial scorecard, as well as if you want to reach out to us, we can do this type of work with you. It's a great spot to do it. beerandmoney.net is the website. If you have any questions, reach out to us. Hope this episode is valuable for you. Make it a great day.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
7502257.1. Expiration date January 2027.